I think we all remember in the post 9/11 environment, certainly at that time, a lot of people said, look, this is going to permanently destroy demand. Demand is not going to come back. People are going to find other ways to conduct their business. They're not going to need to travel anymore. They're going to use teleconferencing. They're going to use video chats, whatever it was at that time in 2001. It didn't happen. It didn't happen, at least not in the way that we anticipated. That's not to say the demand didn't change, and certainly you know that it did as well as I do. But it also drove a lot of innovations, right? So some of the innovations that it drove, frankly, are things which have contributed immensely to the profitability of the industry over the last couple of years. For instance, the unbundling of the product and the rise and importance of ancillary revenue. I don't know that would have happened had we kind of been in the environment that we were in the late 90s. It just wasn't part of the business. And I would expect that after this current situation is a little more fleshed out, we're going to see a lot of experimentation. We're going to see a lot of things that change in the industry. And we just have to go through some pain to get there. Let's start first with what GDP, gross domestic product, is going to look like probably in 2020, and how that compares to the most recent recession that we would maybe use as a reference point. So here in this bar chart, we see three different projections for future forecast GDP, one from Goldman Sachs, one from Capital Economics, and one that was published by the IMF. And as you can see, these forecasts range from anywhere from 4% to 6% reduction year over year in GDP. So let's settle on a kind of midpoint number there at 5% as our basis for discussion here. Compare that back to 2009, all right, where GDP fell by 2.5%. We're looking at double that basically for 2020, and I think we just have to keep that in mind as we look at kind of how things may recover going forward for the airline industry. Looking then at the right half of this same chart, we've put together three different scenarios: what they call a V-shaped recovery, what they call a U-shaped recovery, and what is also called then finally the L-shaped recovery, which is a bit of a misnomer because it's really more of a backwards L on its side. So I like to call it a swoosh. Nonetheless, we have put together a couple of estimates based on those different recovery scenarios, bearing in mind, the last recession that we had was a 2.5% reduction in GDP, and that created a scenario where we lost basically 7 years of passenger volumes in the industry. I don't think it's reasonable for anybody to look at the 5% reduction and say that we're going to get out of this in short order. I don't think we're looking at a V-shaped. I would be surprised if we're looking at even at a 3-year recovery timeframe. I think it's going to be substantially longer than that. I think we would be fortunate if we got out of it in 4 or 5 in terms of the recovery to 2019 levels of enplanements. But it may in fact be longer. And I think that drives a lot of other changes in the industry, right? So the industry is going to be smaller for a while. That's going to have some big changes as far as who participates in the industry, which sorts of companies survive, which don't. And obviously, the employees are going to experience a lot of the negative implications of that, where there's for a sustained period of time, there's probably not going to be the demand for the same number of employees that we currently have employed in the industry. But if you look at the amount of cash that U.S. airlines have on hand, for instance, most of the financial analysts out there like to look at the overall liquidity, how much cash they have, how much cash they can get, and then obviously how much money they're burning on a monthly basis. And if you look at that, most U.S. airlines are anywhere from, say, 3 to 9 months of liquidity. What I will point out is, even if you look at the money they get from the government stimulus and you maybe add a margin of error based on reductions in costs and so forth, That's still far too few months to accommodate either the V-shaped or the U-shaped recoveries, which would be the best kind of possible scenario here, right? So no matter what, things are going to have to change. How they change, how we adapt, how we modify the business to accommodate the new normal or the new normals, as I like to say, as we go forward. We're here to hypothesize, I think, today and possibly instigate some thinking about, where we go from here.
What really strikes me here, especially in regards to what you said, about the recovery and just entering it, is, estimates for a V-shaped recovery are still almost 2 years. That's a very fast and often argued unrealistically fast recovery. We are arguably a month and a week, so 5 weeks into this crisis. We don't even know what we're going to face yet. So for airlines to be looking at, say, even a 20-month recovery period from this point on, we're 5 weeks into 2 years. The world that we now live in on the aviation space is going to change multiple times before we find our way out of this. So airlines right now, even given that your 20-month scenario, airlines right now are entirely focused to further just essentially buy time so that they can then look to see what the new rules are before they make that next decision. We don't even know what the rules are. All we know is that 95% of the people stopped showing up to their flights.
Yeah, that's right. And I think, you raised a good point there, which is that the federal government CARES Act, the 6-month duration, for instance, on the payroll assistance in the CARES Act, that's not going to change the fact that, we're looking at a multi-year recovery, and 6 months doesn't cover all of that time. But what it does do, and I think this goes to the kind of the phases of recovery, is that it buys time. It buys time. It hopefully gets us to the point where, as a country, as an economy, and as an industry, we have gotten past the immediate shock of the public health issue of the pandemic. We've moved beyond that to where we feel like we may have that under control, hopefully after 6 months. If you look at your typical, U.S. airline management teams, they don't have a lot of experience with pandemics, right? None of us do. But they do have experience managing through economic troubles and recessions. And so I think, the CARES Act basically puts us in the realm where management teams are going to be able to treat this as they have treated other economic problems in the past. And, looking at the recovery timeline, I think we still have some serious unknowns, right? So the first phase is, what happens in the, during the public health phase of the recovery. And you can call that anywhere from, now all the way up until whenever a vaccine is developed, whenever there's an effective treatment for the COVID-19 problem. Once that is kind of resolved, then you're in a point in time where you're looking at demand recovery, and it's an economic thing where you're looking at then the recovery of the U.S. economy and then the industry within that. And I think all of this is predicated on the idea that customers are going to come back and want to fly again, right? And as an industry, you have to be thinking about, how do you get people back on the airplane? And between now and then, between during the various phases of that recovery, like you said, Courtney, it's not just one phase, it's multiple phases, right? You've got, a new normal that will be apparent 3 months from now. And then you have another new normal 6 months from now, or what have you, a year down the road, 2 years down the road, right? And I think as airlines get into that, I think the airlines that are best equipped to deal with that are the ones that are willing to try new ideas and frankly fail, right? The ideas which they try, eventually they're going to get to the point where they're going to become very adept at figuring out what works and what doesn't. But it's not going to be a static environment, right? The demand, the shape of the demand, who's willing to travel, where they're willing to travel, whether they have concerns, actual fears about public health issues, that's all going to change over time. Here's a great example, right? Delta announced that they will be blocking the middle seats on their aircraft so that people can be spaced apart, from one another. That's a great example of an airline looking to try something, anything, experiment with it. Does it work? I don't know. Does it get people back to where they're more comfortable flying when they know that there's not going to necessarily be somebody sitting next to them on the airplane? It might.
Yeah, and blocking the middle seat in its own right is kind of a degrading opportunity, because as traffic returns, your opportunity to keep that seat empty becomes more and more expensive. Just wrote about this in the Air Current today. Actually, was published today. In that, blocking the middle seat may work to reintroduce passenger confidence that they won't get sick on the airplane, but the problem is it limits your load factor to 66% on your narrow body fleet. I mean, that's 50%
Yeah.
on your regional fleet. So it's something that can be done until it actually starts to work. It's like step one of 12 steps of running an airline is recognizing that you don't know what step two is, because we don't. We don't even really know what the rules are going to look like. We can draw the spectrum of possibility. But again, we're staring down 95% reduction in revenue, right? It doesn't get much lower. The good news is that there's only one way to go. The challenge is in how long that is. Is it V? Is it a U? Is it an L?
Right. And how does the industry look when it comes back, right? And I think that's the industry of 2019 certainly didn't look a lot like the industry of 1999. The other part, of course, is international traffic, right? We're the reliance on international traffic for a massive percentage of revenue for particularly large mainline carriers, that's done with for now. It may come back, but it's going to come back slower than the domestic stuff. And in the interim, all of the routes and fleet decisions that depended on international traffic, those are very obvious points of weakness in the business model for the time being.
What will be required in order to travel internationally, and even beyond that, until there is a vaccine available globally, and that you have enough of your customer base that feels comfortable with the vaccine? What are the chances that people are not only going to be challenged to put up with the restrictions on engaging in international travel, but the chance that they may find themselves somewhere else, get sick, or have a false positive test or something and not be able to get back? I think, within the next 12 months, if anything like that were to happen while traveling, certainly internationally and even domestically, the idea that you may be stuck somewhere outside your own realm of control is going to have its own depressant effect on demand.
Yeah, that's right. Yeah. I mean, clearly, and there'll be places worldwide that experience recurring flare-ups of the public health problem, for the foreseeable future. And so I think that the international traffic is going to struggle a lot more than the domestic traffic. Again, looking at this as a phased approach to recovery, as opposed to sort of something that happens all at once. We have, like I said, the pandemic, the public health timeline, and then there's the economic timeline that happens after that. And everything, again, depends entirely on whether people are willing to accept the risk. And as you mentioned at the beginning of the call, certainly some businesses are going to be reluctant to accept that liability. And so I think the pattern for, domestic, or rather for the pattern for business demand is going to be different than the change in leisure demand. And I think leisure demand, has its own challenges, right? I mean, a lot of people are accustomed to taking short breaks, hopping over to Vegas or, down to resorts or whatever it may be, where, you have lots of people in a confined space. I'm thinking of, concerts, things of that nature, and those sorts of activities may just be off the table for a while, right? Cruise ships are a great example, right? I mean, it's just hard to see that there would be a lot of demand for those sorts of travel experiences, certainly not in the near term. And I would suspect even through the rest of this year into 2021, those segments of the market are going to be substantially depressed.
Mm-hmm. Yeah, back on the topic of GDP, which again is kind of the core of the economic foundation of airline travel, or I guess just discretionary spending in those regards. Looking at the trend going back to 1950 or the quarterly GDP, I mean, this just illustrates exactly what you were saying. I think what is so unique about this pandemic, and why, I mean, this illustrates perfectly how we've never been here before. I remember reading a GDP forecast for Q2 GDP that said it could be as bad as 7%. 7%. And then it was revised, and it was revised to, I believe, about 12 or 13%. And then Goldman Sachs came out and they said 24%, which is just insane. I mean, those are 1929 levels, if we even hit it. This last week, JP Morgan came out and said their new Q2 GDP estimates are minus 40%, a negative 40% growth of the US economy annualized. That is for the second quarter in 2020. The numbers we're talking about here are staggering. On the other hand, and I think this is a great way to kind of illustrate the difference between what we saw in the 2008 crisis and what we're seeing today in the pandemic crisis, is that the economy was affected in very different ways. And in the 2008 crisis, it was more of a top-down challenge where you had the credit crisis and you had the mortgage-backed securities failing. And of course, there were tons of job losses that trickled down through that crisis. This one is the exact opposite. The capital is there. The economy is now hurting from the bottom up, and that will propagate through the economy to the top. The 2008 financial crisis, being more of a top-down hit to the economy, maintained what we would call the working core of the economy. The waiters and the waitresses, the hourly staff, the fundamental working capability and value producing portion of that economy. And with 40% reduction, and it is purely a pause in the economy of the largest economy of the world that, by the way, every other economy is going through at the same time. We are probably 4 times beyond where we've seen before. And then how quickly does that come back? And what does that look like? And then, you can take that and relate it to people's personal choices on how comfortable they are to spend the discretionary income that they have. And then further to that, how comfortable they are putting that towards travel, which has taken a disproportionate hit because of the correlation between spreading a global pandemic.
That's right. Yeah. And I think, again, the 40% is a quarterly number. You look at it for the entire year, it'll obviously look, well, we hope it'll look less severe than that, but it does. I mean, it certainly does depend on how things go from here, which again, nobody really knows. Having said that, if you look at the jobless claims that have emerged over the last 4 weeks, there's a legitimate question there about how many of those jobless claims, and I'm sure somebody has the answer, how many of those jobless individuals will be rehired, when things get going again. And so it may not be that those are permanent job losses that will take years and years to recover. Some of them could be hired back. Certainly not all of them, right? I mean, I think the statement that we would all agree at this point is that, going out to eat at a restaurant, going to your favorite brew pub where there's 50 other people, whatever it may be, a lot of those things are going to be off the table for a while, or we're going to change how we, enjoy those sorts of activities. And so, do they need as many people? Well, arguably not. So I think there will be a durable component of that sticks around for a good long while. But I think that thinking about those things is what drove the initial assumption that we would be looking at more of a V-shaped recovery. But as this problem metastasizes, I think it's becoming abundantly clear that that there's no way that we can regain these losses quickly, and that there will be some durable effects over time.
For traffic to triple, we would be at 30%, right? So we're going to see massive swings. We're at essentially zero travel now. Where do we expect to be by the end of 2020?
2020, a lot of it depends on the public health timeline, right? I mean, if you look at the original assumption about how long it would take to develop a vaccine, I think we've heard estimates of 18 months. Well, if that's the case, then we're obviously well through the end of 2020 and halfway through 2021 before that occurs. And so I think, again, breaking it into bite-sized pieces, if you will, I don't think anybody can be talking about a real sustained recovery. Recovery, yes, but not in terms of having already climbed out of the trough through certainly the end of 2021 and beyond. Breaking it down into the pieces and looking at the unknowns with respect to the public health issue is obviously important. how do businesses respond to that, right? If you're an airline with, call it 9-10 months of liquidity and, obligations to serve a certain route network, obviously with reduced frequencies, but nonetheless, you have that obligation as a passenger carrier if you're taking the assistance from the federal government right now. How does that change your business? And who survives? And what sort of business do we have at the end of it? I think, there's been talk about consolidation for a long time, right? Whether we're talking about the regional industry or we're talking about the ultra low cost segment. I don't think that the thesis there has changed as a result of coronavirus. I mean, it may have accelerated it, but there was talk about that sort of consolidation already. I think the next question is, what happens to the hub and spoke system, and what happens to the ability to fly, frankly, narrow body aircraft. And then again, the choice I outlined earlier, are we going to go back to a smaller average gauge on the domestic route environment, or do we stay with something that provides more spacing on the airplane? And ultimately, I don't think that's a decision that any airline management team will be making. I think that's something that the customers will be making. So I think there's more adaptations and more innovations to occur there. Thinking out loud, what could that be? Well, I mean, it could be something very simple things, right? Wearing masks on airplanes. It could be boarding procedures. It could be somehow partitioning the aircraft and doing seating assignments based on passenger risk somehow. Obviously airlines have talked about the sanitation measures which they've implemented, and that's great. But I don't think that in and of itself, solves the problem for the flying public. Ultimately, the flying public wants to know that they're not going to get sick on an airplane.
The vast majority of the global airlines right now have one objective, and that is to survive this crisis. There's no better way to put it. Survive the zero revenue or the 10% revenue until you can get to the point where you learn the rules of what the game is. The objective is to survive to the point where you can start the next challenge, right? Understand what the rules are. Just get to that point and then take that challenge as it comes.
I think one of the things that would concern me is, again, going back to, are we facing a structural shift where the way and the volume at which people consume travel is fundamentally going to be diminished going forward? Or are we in an environment where, there are opportunities that emerge out of this that didn't exist before? It's probably both of those to some extent, right? I mean, I suppose one could look at the consumption of travel as a luxury commodity, as we pointed out already in this call, and for some amount of time, there may be people who choose to consume other services with their disposable dollars, and that's going to be a load or a burden on the industry for a while. But eventually, what are the opportunities that emerge? And I think that's the exciting part.
I agree. Matt, I want to thank you for joining for the inaugural conversation. Any parting words of grand perspective you would like to leave with the community?
Well, I'm certainly grateful for the opportunity to be on the call today. I think the real thing here is, we're in uncharted territory. We've been in similar situations in the past, and there are lessons to be learned from that. But again, those companies which are prepared to experiment and try new things are, I think, in a better position than those which have a more conservative, risk-averse bent. And so, as we look forward to the next phase of recovery or next phases of recovery, I really do believe that we have to be flexible in the sense of adapting to the new reality, because it's not the reality we have now is simply not the reality we had a year ago.
And nor will it be the reality that we have a year from now.
Or 2 years from now.
Oh yeah, you're absolutely right. Matt, you truly are, one of the thought leaders of the industry and the community, and I truly want to thank you for allowing me to hang around with people who are smarter than myself. It makes me look better. So thank you very much for your thoughts and insights on this.
My pleasure. Good luck with your bowl cut or your man bun or your corona cut, as I like to call it. Since none of us can go to the barber and get a proper haircut. We're all struggling under these same burdens, existential burdens.